Welcome to FinTech Confidential, bringing you the people, tech, and companies that change how you pay and get paid. We've got Brian Barnes from M1 on.
The reason that we're called M1 is, and this gets into my geeky personal finance economic background, M1 is a quantification of the money supply. So if you added up all the checking accounts, currency, coins, paper bills in circulation, got to one number, that's M1. We looked at it as everything's digital now. A share of your favorite stock is digital. The money in your checking account is digital. There are levels where it becomes risky and you're putting yourself in a precarious position of potentially forcing yourself to sell with small deviations to your portfolio value. Handing someone a chainsaw, man, is it a lot better at chopping down a tree than just a hand axe? Chainsaw can do more damage than a hand axe can. We are delivering a very powerful tool to the individual, but there's still risk associated with it and people need to make prudent decisions. Unfortunately, I don't feel like there's a trust hack. It would be nice to say, say these 7 incantations and, trust develops. The best way to build trust is to deserve trust. Promise a high-class experience, a delightful platform, great tools, great rates, and then you deliver it consistently over long periods of time. Every single customer interaction we view as it's either an opportunity to increase trust by delivering what they say or decrease trust by falling short. From the beginning, M1 was trying to build this comprehensive suite. We started on the investment side, which we said is the asset side of your balance sheet. We then said, okay, if we have your assets, can we optimize the other side of your balance sheet with your liabilities? Can we offer the most flexible ways to do that and the lowest cost to do that? The end experience is only as good as the infrastructure that supports it. Some of the financial service infrastructure is quite old. And so, at times you have to say it's time for an upgrade and evolution. We vertically integrated on both the brokerage side by going self-clearing. And so we started on Apex and then built all the technology and the regulated entity to be the self-clearing broker-dealer, which puts us into a pretty elite group of about 200 clearing firms in the country. Absolutely does not make sense to own the regulated entity to do all three. That it makes sense to partner with the bank that is managing different components of their business, and you can specialize and perfect one of those verticals, or maybe two. The second that you do all three, you're just giving up a lot of economics and control that it probably makes sense at some point to bite the bullet and do it.
Welcome to Accrued, the FinTech Confidential series presented by LoanPro. In this series, we're deconstructing the complexities of lending and exploring compliance, optimization, modernization, and personalization through insightful conversations with the industry's best. I'm Ted Huff, and here with my co-host Colton, we'll be guiding you through the intricacies of lending world, whether you're deep into LendTech or just intrigued by how technology is reshaping lending, you're in the right place. So now let's dive into another episode of Accrued. Colton, man, welcome back, brother.
Ted, it's good to see you again.
We've got Brian Barnes from M1 on, and this is a conversation that I always enjoy having with Brian, so I'm excited to get it out in front of everybody.
Absolutely. Brian, I'll share more later. M1 Finance and B2 Bank, excited to learn more.
Today, we're diving into discussing a fascinating company that is making managing your money straightforward as checking your email. I'm talking about M1 Finance. It's a personal finance platform that's redefining the way you think about investing, borrowing, and spending. Now, really what sets M1 apart in this crowded market of financial giants like Schwab and E-Trade is that their unique blend of services that cater to the modern investor. That's not your father's investment platform, that's for sure. Because M1 combines the tools for investment with flexibility of personal banking features like high margin lending and high yield savings, and it's all wrapped up into one intuitive package. Then they on top of that offer a credit card that directly integrates into your investment strategy, rewarding you for spending with up to 10% cash back. Now, under the leadership of Brian Barnes, the CEO, he's the founder as well, and they are managing over $9.1 billion in assets and has attracted significant investment, solidifying their status with being a $1.5 billion valued company. Now, they're not just keeping pace, they're setting it and providing options that traditional brokerages just haven't prioritized. Brian is a finance enthusiast, and he started out from a really, really young age. And today, we're going to be talking about these things with Brian and how we can bring these great tools to the market. So, Brian, again, we're super happy to have you here, but let's go ahead and dive into the meat of the conversation.
Absolutely. Thanks for having me.
Brian is well regarded, and for me personally, as one of the more successful fintech founders, I'm stoked to dive into the innovation you're driving at M1 Finance and what the future holds. I feel like there was a craze during the craze of neobanks when everyone was starting a neobank about everything imaginable. And once they really focused on your mission, what you were driving, and you haven't wavered, and I've really appreciated that.
I very much appreciate the compliment.
Here's a quick message from the Accrued series sponsor. As default rates continue to rise and margins compress in lending, financial organizations are searching for solutions to combine that operational efficiency with innovation. Look no further, as LoanPro allows lenders to enhance their origination, servicing, collections, and payments using the foundation of a modern lending core. Check out loanpro.io to learn more about how over 600 financial organizations have modernized their tech stack with LoanPro. Brian, how in the heck did you fall in love with finance, and what got you on your path towards building M1?
Yeah, so I was fortunate to just be introduced to finance at a young age. And so, coupled with a school project on the stock market, parents sort of said, hey, if you're, doing this fake investing platform over here, we can give you access to a brokerage account and you can do real money over here. Similar to a kid who picks up an instrument from a young age, you just develop sort of a natural fluency with it. That was me with finance. And for personal finance and specifically investing, it's sort of a very interesting intellectual puzzle with stakes attached, which I just found a natural curiosity for. And so, I joke, some people like their fantasy football or sports betting. To me,
Brian, I've never heard the analogy of like investing is like fantasy football or fantasy baseball. I think that we should have like an investment group and league. Whoever performs the worst gets some crazy punishment and have to go eat 100 pancakes at IHOP or something.
It may not be as exciting as the league, and I don't know if there'll be an FX show about it, but I would watch it.
I've been really impressed at M1. Y'all's been focused on your mission, and I feel like laser driving towards that mission. Help us understand what that mission and vision is, and also what are some of the challenges you faced along the way, and advice you give to fintech founders on how to overcome those challenges.
Ultimately, feel like a financial firm is there to improve their customers' finances. I don't think we're reinventing something new. We're really developing a better mousetrap to do it. So what we're ultimately trying to do is just create a comprehensive and best-in-class personal finance platform to help people manage their money in intelligent and prudent ways. If we were to describe the mission, it's just help people improve their financial well-being. What is the best that personal finance has to offer? And we think of that as the private bank. It's the ultra affluent, the top 0.01% or 0.001%, get access to the best tools, the best rates, the best service. What we're trying to do is say, can we offer the same rates, tools, selection, service, and offer it via a digital platform so that it's more self-serve? So you can come to the platform and say, this is how I want my money managed holistically. Software takes over and automate that until you decide differently. And because it's a digital platform, we don't charge for things like investing. We don't charge commissions. We don't charge an asset-based fee. And so really what we're doing is offering a sort of digital private banking experience, a comprehensive personal finance platform. And ultimately what we're trying to do is help people improve their finances. And first and foremost, that's probably increasing people's wealth over a long time.
I can't imagine that your strategy back in 2015 when you started was really to just rush straight into this. And on top of that, we had the global pandemic. You had people participating in meme stocks. We've seen Bitcoin ETFs. We just saw, I think, I don't know if it's been approved yet, but we have like an ETH ETF that's getting ready to happen as well. We've seen inflation. We've seen all these different things going on. How does M1 approach adjusting to those changes in the market as part of its strategy?
From the beginning, we were trying to create a comprehensive personal finance platform. We had to build it component by component. So we started on the brokerage side, building an investing platform. We then went to brokerage margin. We then added checking accounts, a debit card, a credit card, then personal loans. And so we've expanded the product suite over periods of time. we don't worry about the market size. That being said, like you mentioned, the market day to day or, month to month, week to week, changes dramatically. You get low interest rates, high interest rates, and what goes in and out of fashion changes. M1 tries to say, we are here for the long haul and we're here to improve your finances over a decade. And then we're also going to create compelling products that are more attractive as the sort of ebbs and flows of the financial markets change the attractiveness of a good product.
I was ready for you to start talking about Dogecoin. I jumped on the Dogecoin.
What about Pepe? Come on, don't leave Pepe out.
I know. What I do want to understand is what advice would you give to FinTech founders on how you overcame those challenges and how you'd approach it today?
Now let's quickly shine a spotlight on a game changer in the financial world, ClearingWorks. Simplify your financial management with a one-stop solution for all your AR needs and with a single login. Are you intrigued? Visit clearingworks.com to schedule your demo today.
Everything is easier said than done. It's easier to say, create the best-in-class personal finance platform. We're close to a decade in, and I think it feels like we're just getting started. The combination of you have to stay true to your vision and you're building something of substance over long periods of time. You do have to move very quickly. You have to build the foundation so that people can trial the products. The bar that you have to achieve is quite a bit higher than many other consumer applications out there. It doesn't matter if you delete a photo. It doesn't matter if you lose a few dollars here and there. You have to then be better than what's on the marketplace because, why use a random company on the internet if some big name brand has an equal product? Then you have to get the word out there and convince people that this product is so good that it's worth handing over your hard-earned money, your life savings. I wish I could distill it down to here's the one item.
You're talking about what it feels like is building that level of trust with the consumer and the marketplace. And today with financial products, it's a lot harder to do that because of what we're seeing happening in the news. What are some of the things that you guys are doing at M1 to build that trust and to move it forward? And beyond that, how would you suggest other people build that trust as well?
So unfortunately, I don't feel like there's a trust hack. It would be nice to say, say these 7 incantations and, trust develops. The best way to build trust is to deserve trust. Promise a high-class experience, a delightful platform, great tools, great rates, and then you deliver it consistently over long periods of time. Every single customer interaction we view as it's either an opportunity to increase trust by delivering what they say or decrease trust by falling short. And we've done both. It's always about setting a new baseline, improving, and just putting one foot in front of the other in terms of building up to that ultimate high-end experience that we're trying to deliver.
It's a lot of what we talk about here at LoanPro is winning every interaction. 4 years ago, when I was at MX, there were lots of neobanks. There was lots of surveys that came out that evaluated trust that consumers had from neobanks or childhood banks or digital finance platforms and traditional financial institutions. And those digital banks won out on almost every category outside of trust. Folks just trusted banks and credit unions more. And now they're basically even. And we've seen some of the banking things and happen in the news pretty significantly with Silicon Valley and Signature and others. And that's what's interesting is kind of even the playing field among all financial products, whether you're a bank or not a bank. What product experiences you build to drive trust and how you prioritize your roadmap in the right way. Help us understand prioritization and where the focus is from product roadmap.
From the beginning, M1 was trying to build this comprehensive suite. And we viewed it, we almost broke down an individual's finances like a company looks at theirs. We started on the investment side, which we said is the asset side of your balance sheet. We then said, okay, if we have your assets, can we optimize the other side of your balance sheet with your liabilities? And so we started with brokerage margin. Can we offer the most flexible ways to do that and the lowest cost to do that? We then started going into the cash flow side of things. And so we built a checking account, and now it's a high yield savings account. So it pays your highest balance. And so that's how you receive money. We then built the credit card, which is how you spend money. Ultimately, where we're going, over time is, can we build insights into that? Can M1 provide actionable information such that you're more confident in your finances? And then ultimately above the insights, can we provide guidance where it's, can I make informed decisions on the best way to manage my money? We really do feel like the ultimate end state is feeling like you have a digital CFO in your pocket that is optimizing every aspect of your finance. Anytime a transaction happens, we say, here's where the money could be best routed in your unique situation according to your unique wants, and just have it happen in the background of your life, all while receiving the best rates that you possibly can on all the financial product out there.
I'm a geek at heart. So like I like to dive into the plumbing side of the house and really see how the money moves and who's doing what and what have you. And I know that in the early days, M1 leveraged a lot of partners to deliver on that. But recently, B2 Bank has come in to be part of that ecosystem that M1 leverages. How did you and do you suggest that founders look at going to that next level? And when do I bring it in-house? And when do I keep it out through a partnership relationship?
And we've had our journey. I don't know if we've nailed it every time, but M1 looks at it as there's different layers of the stack in terms of delivering a financial service offering. So you have the regulated entity. We broadly break it down in our realm into brokerage and banking, your technology and infrastructure layer on top of that. You then have your product layer, and then you have sort of the end customer experience that people go into. When you're starting, it is way too much to bite off and chew to tackle all of them at the same time. It's tens, if not hundreds of millions of dollars to totally vertically integrate, all of those items. And so you really have to say, what can we do that is value add? What are other partners out there that are doing things better, or they've solved the issue that we can partner with? And, it's different parts of the stack you go and pick and do partners. And we, M1 from the early stage, said, we're going to deliver the end customer experience. That's what we're going to focus on early. We're going to partner with people under the umbrella to support all of that. Then over time, you get to a size and scale where there's sort of twofold decision criteria. Is one, you're splitting a sort of total revenue pool amongst many players, and vertically integrating, you get to capture more of that. And then the second is the end experience is only as good as the infrastructure that supports it. Some of the financial service infrastructure is quite old. At times you have to say it's time for an upgrade and evolution. We vertically integrated on both the brokerage side by going self-clearing. And so we started on Apex and then built all the technology and the regulated entity to be a self-clearing broker-dealer, which puts us into a pretty elite group of about 200 clearing firms in the country. And then I, as an individual, we were partnering with a whole bunch of partner banks out there. I, as an individual, went and purchased a small nationally chartered bank, and that gave us the regulated entity, and then built a whole lot of technology on top of that to support our banking products. And we've continued to just partner with best-in-class providers that fulfill needs that we don't feel like we could differentiate on. It's a combination of do something yourself, partner with others. You definitely can't do it all by yourself. And then you do have to stage it over time of get to a size and scale where vertical integration makes sense. And then it does make sense to do that at some point in time if you achieve the customer and asset scale.
Your chief risk officer is so happy with you right now. The fact that you're very clear in saying, I personally went and did this with the bank, that chief risk officer is going to be so happy.
One is not a bank. We do not provide, believe me, there's a whole list of disclosures that I'm supposed to say every time I mention B2.
What if you could build fast but not break privacy? What if you could ensure data privacy, governance, and compliance with just a few API calls? What if you could worry less about PCI requirements while actually improving privacy and security? How much more time would your team have to truly innovate? How much faster could you build and ship new features? How much more powerful could your app be? Skyflow is a zero-trust data privacy vault delivered as an API. Skyflow's radically simple design lets you collect, secure, and tokenize personal information like card data and payment details. And with built-in features like encrypted data analysis and sharing, anonymization, and advanced governance, your days of choosing between data security and data usability are over. Whether you're just concerned with PCI compliance or need to go further to include CCPA, GDPR, SOC 2, and beyond, Skyflow has you covered. What if you could build fast but not break privacy? With Skyflow, you can. Visit skyflowsecure.com today to learn how.
It's not a thing a lot of fintechs go out and do is to acquire a bank. It rarely happens. We've seen it occasionally, like Varo got their own charter, Lending Club acquired Radius Bank, and now they have that, right? This is slightly different because you personally and you have B2 Bank as a relationship with you. And I've always personally had a dream of like, maybe I'll go work for a fintech, make a bunch of money, have money, go buy a bank, and like have some fun. I don't know if we've spoken
have a bank and have some fun. I haven't heard those two in the same sentence before.
But all that to say, what was the decision like to then say, hey, I'm going to go buy a bank? And as a result, what have you learned from that experience?
There was this very unique opportunity that popped up to ultimately purchase the bank that I did. And so that is a heavy component of luck, and circumstances play a big component in everybody's journey. We look at banking as its deposits, its payments, whether that's ACH, wires, or cards, and then its loans. Absolutely does not make sense to own the regulated entity to do all three. That it makes sense to partner with the bank that is managing different components of their business, and you can specialize and perfect one of those verticals, or maybe two. The second that you do all three, you're just giving up a lot of economics and control that it probably makes sense at some point to bite the bullet in doing. We probably did it a little earlier in our journey just because we had the opportunity arise, but M1 is gathering deposits with our earn products. So we have a 5% interest savings account and brokerage cash account. So gathering deposits there. We are taking those deposits and lending them. So we have an unsecured personal loan product. We have a credit card product. And then transactions, we're facilitating money movement with ACH, with wires. We have a credit card. We decided this is in our journey. We do want to be a full-fledged regulated financial institution. We want to own brokerage. We want to own banking.
One of the items that I found really interesting that you don't see a lot of is really leveraging the investments that you've made as a means of collateral to get loans and to do things so you're not taking out of your cash flow. I think that's really interesting that you've brought it out of the high net worth individual space and into the public area. Could you help us understand what it means for those who are listening?
This is something that's available to ultra high net worth people. Companies and high net worth individuals look at their finances holistically and they say, how can I, if I need to borrow money, if I need liquidity, how can I leverage every single thing in my financial picture to make it more flexible and lower the cost? People tend to be either like way too in debt or 100% assets. Most companies, most high net worth individuals have a lot of assets and truthfully probably a lot of debt as well. And so, it's how do you strategically use both to advance your financial picture? And so we took the same perspective in that like digital private bank. Can we leverage everything about you to open up possibilities? If you have a liquid investment portfolio and the brokerage firm, the bank says, hey, I know that has real value. I can mark to market on a second by second basis. If need be, I can sell it. That is the lowest risk lending possible. If you compare it to a mortgage, if you want to reclaim a mortgage, you have to foreclose on the home. You have to kick the person out. You have to sell an illiquid asset. There's a whole bunch of issues, both ethical and financial associated with that. Whereas a stock portfolio, it's a more advantageous way to collateralize a loan. And so ultimately what M1 is trying to do is to securitize as much as possible against your most liquid assets. Then we can go against hard assets like home and car. So whether that's mortgage, a HELOC, an auto loan, things like that. And then we can also do it on an unsecured basis and do it with your credit score and ability to pay. It's really, you sign up, we line up all of these in the background. So it's really trying to bring that same sophistication that companies use or high net worth individuals use and bring that down to a generally affluent user base.
How different is it to manage a variable asset like that versus a mortgage or a personal line of credit? How is it easier or harder to manage the risk level on that?
In our ideal world, you would have sort of one general purpose line of credit, and we would do all the things in the background to make that happen. Due to the way that the regulations are structured, you really do have to keep them separate. We do have a little bit of abstracting that complexity away and saying, we'll open up these facilities in the background. They'll have their own terms and conditions and disclosures associated with it. In terms of the collateralizing it against stock portfolio, the tons of benefits associated with that. Like we know what that's worth second by second. It's in a very liquid market. We can click a button and sell and reclaim our collateral back in seconds, and we can set up automated aspects to do all that. And so it's actually a better, a less risky mechanism for the financial institution. You do have to create a lot of systems to monitor and manage and balance that. The tough thing is those values can change very quickly in a moment's notice. Something catastrophic happens with a company and that value can tank immediately. And so, you're trying to manage the volatility associated with that stock portfolio. Truthfully, it still happens in like mortgages and HELOCs. Those values do change relatively frequently. You just don't get marks on it. There is sort of this like what you don't see doesn't kill you type aspect with that. Banks out there on commercial real estate, they just ignore that the value has gone down.
They're just waiting to reassess it when it comes back up. That's
exactly. You wait and you sort of wait for everything to recover. It's a positive if it gives you real-time insights into what your assets are worth at any given basis. The risks associated with that is if it becomes under-collateralized, you can lose money very quickly, and the financial institution can force you to sell when things go down. It is not without risk. There are levels where it is very intelligent to use it, and then there are levels where it becomes risky and you're putting yourself in a precarious position of potentially forcing yourself to sell with small deviations to your portfolio value. Even internally, we talk about it a lot as is handing someone a chainsaw. Like, man, is it a lot better at chopping down a tree than just a hand axe? But chainsaw can do more damage than a hand axe can. We are delivering a very powerful tool to the individual, but there's still risk associated with it, and people need to make prudent decisions with it.
I love what you're talking about, and I especially love the early part around, integrating different, to whatever degree possible, different lending types. Because in the end, if you think about the consumer's job to be done, it's I need money for something, right? We've been talking to lots of folks recently on Visa's announcement on flexible credentials, essentially the ability on a single access point to access debit and credit and different lending types, and all through just a single card as an access point. That's like the next step of like, hey, I need money and I get to choose where it comes from, and I have an easy access point to be able to do so. I feel very aligned with exactly what you talked about with what you're doing in M1.
A little, maybe even behind the curtains. So the reason that we're called M1 is, and this gets into my like geeky personal finance economic background, M1 is a quantification of the money supply. So if you added up all the checking accounts, currency, coins, paper bills in circulation, got to one number, that's M1. We looked at it as everything's digital now. The share of your favorite stock is digital. The money in your checking account is digital. And so it's pretty costless and interchangeable to swap between the two or go to a line of credit. And so we're trying to say all of your money, any asset, any liability is completely fungible. It's sort of this one universal M1 account, and you can do with it what you want. You can back it by what you want. You can spend it where you want. M1's the most liquid money supply. And we're trying to say, we're just trying to increase the liquidity of this, of your total personal financial situations. At the end of the day, like no one picks up on that. It's more M1 just sounds like a, prestigious financial institution firm. That was the background is a nod to the liquidity that you get with cash, currency, checking account. And we're trying to say that same liquidity should exist across your total financial picture.
Talk a little bit about the importance of the cool things you're doing and innovating for customers, the importance of having a modern infrastructure underneath the hood that actually supports those things.
In financial services, at some point along the value chain, you're going to interact with a 1974 like COBOL mainframe. It is this, and the issue with mainframe, like the benefit of mainframe, like they're fantastic, they're reliable, they number crunch,
they're freaking bulletproof.
Yeah, they're bulletproof, all these good things. And they're batch cycle. And so, typically financial service firms are open from 8 to 5, they shut down, and then you do your processing overnight. I would say in M1, you're building this modern digital infrastructure, which is all real time. It's streaming. It's, up to the second. You're just transmitting a digital instruction to move money or move an asset or move a liability, and it's taking place instantaneous. And then you're having that coincide with a out-of-date batch. It just becomes incredibly important to have lots of systems for auditability, for reconciliation, to sync up with regularity. Worst thing that can happen, and we're seeing it in the news, is something goes out of sync day one and it just compounds day after day, month after month, and the records and the systems get more and more out of sync as time goes. And so what I would say is the art and the science of engineering the financial servicing is maintaining a new system and plugging it into old, and then doing checks and checks and checks and checks to make sure that everything is in sync and nothing's out of balance.
As you talk about these modernization pieces, there's a lot of different places we could go for modernization. And just like you said, we're going to end up at some point being at these legacy COBOL mainframe solutions. How did you choose which things to modernize first? Hey, Ted Huff here. Ever thought about how you could streamline your application and underwriting process? Well, let me introduce you to Under. Why keep using the outdated methods of PDFs when you can digitize them effortlessly? All you gotta do is upload the PDF, send it out for digital signature, and voila, you're set for the digital age. Are you curious how to make that happen? Head over to under.io/FTC and get started for free. It's really that simple.
Some of the choice of what to modernize first was our plan. And then some of it is driven by circumstances of you run into the kink in the hose and you say, I need to unwind that kink. And, you sort of build it. We're trying to deliver a fantastic consumer experience. If all the technology existed and we could just be a thin layer on top and deliver that fantastic consumer experience, that's what we would do. But when we look at what a fantastic consumer experience would be across each one of the verticals, in our earn, it's I need a place to deposit money. I need it safekeeping. I want to earn as much as I possibly can on that. I want it to remain liquid. In invest, it is I want my assets, my investments to be backed by whatever I want in exact proportion to what I want in conjunction with my risk appetite, tolerance, and personal perspective over long periods of time. When I spend, I just need liquidity at any mechanism that I possibly can. If I can get a ton of cash back, that's beneficial. It's like a discount on everything that you purchase. And then borrow, we talked about I want very flexible terms, ideally no terms, just borrow whatever, and the lowest rate possible. Then there's the additional aspect of can we provide information and guidance to make the right decision or make the prudent, smart decision and implement the plan successfully. Ultimately, there are times where all the technology exists to support that. And man, we would love nothing more than to buy things off the shelf. We did that with Loan Pro we're not going to better our loan management system and the like. And so let's use a best-in-class platform. There are times where that doesn't exist and you say, okay, now I do need to go create it to support what I'm trying to do. And at the end of the day, you're ultimately chipping away down to what you get at bare metal on the brokerage side is the NSCC and the DTC. We have direct integrations with them. On the banking side, direct integrations with Fed. At some point, you do sort of base level infrastructure.
Then you end up in a diminishing returns type scenario where you're just doing things to do things. And
Brian, we've chatted pretty extensively, and I love this analogy. I've got to bring it up because we've chatted about it around arriving at a forever home, right? You arrive at this forever home that hey, we can build on this foundation.
Couple of years ago, M1 was fortunate to raise a lot of money, and we very much viewed our success long-term is going to be driven by, can we deliver a best-in-class product experience? Can we go get a ton of users and assets on the platform? And then do we have a viable infrastructure to support the cost structure that we need? And truthfully, a lot of that comes from, can you automate it with technology? Do you own the regulated entity? Do you not have partners sort of sharing in the economic? Those are the three components. And a couple of years ago, we were very fortunate to raise a lot of money and we said, we're going to vertically integrate and build our forever home. We just did that on the brokerage and banking side of the world. I'm not a home builder, and so this may not exactly be how it's done, but you do tap into municipal stuff. You're not developing electricity, you're not developing the sewer, you're not developing plumbing and stuff like that, but you're building the foundation, you're then framing it, you then have to do all the wiring and plumbing and all of those fun things that are all behind the walls. When you live in the home, you don't actually see it. You just hit the light switch and the electricity does what it does and electrons move and light comes on. We took that same approach of let's systematically do that and lay the foundation. Let's integrate with the sewage and the plumbing and the electricity, frame it over time. I probably take the analogy too far when I'm talking about it internally. Now we're putting drywall up so it's livable. And now that's your MVP. That's the product that you can go to market with. And so you've done a ton of work just to get to the place where, okay, I can live. But then it's a bland house with white drywall, which I have in the background. It may not be the most interesting. You have to decorate. You have to put the furniture in order. And over time, you can just make it more and more livable and perfect to your taste and customize to your things. You get the base level infrastructure and you might build a wing over time. For the longest time, we felt like we were renters using external partners, using external regulated entities. And at some period in time, we needed to say, nope, we're planting our flag. We're going to do this forever home. There's this joke that nobody washes a rental car. When you own a car, you treat it well. You don't wash a rental car. And so it's very hard to take the same long-term mindset when you know that it's temporary. By moving into the forever home, we get to say this is ours forever. We own it. We're never moving out. Let's make it exactly how we want and build it to the best home that we possibly can.
Love that analogy, because in my mind, I'm going, well, you're right. You buy the wire, you buy the pipes, you buy the crete, you buy the wood that's already been milled. You don't cut down the tree and mill the wood. You don't go to the mine and mine out the copper. You just get the pieces and you put them together at the most logical layer level to deliver a long-term usable product, or as you called it, the forever home. And I love that.
100%. And again, to take the analogy too far, which I'm apt to do, you hire contractors. You don't build everything from scratch. You
could, but you probably shouldn't.
Exactly. You bring in expertise when you don't have the expertise or when you don't have the value add. And at the end of the day, we own the land. It's we're not going to pay that, clip the landowner day in, day out for all of time. And so there's benefits.
All of the stuff under the hood on the 2x4s and all of the wire, all of that is relatively the same from a $500,000 house to a $5 million house for the most part, right? What it turns into in the exterior, we have a lot of fintechs on our platform, just like M1 and others. They want to own the customer, member, borrower experience, because that's truly how they're differentiating.
At the end of the day, a person is interacting with the platform. That person doesn't care what's behind the walls, what's behind the thing. They just want it to work. They want their needs satisfied, their expectations met. They want good outcomes for their finances. That's what they're paying us for, or that's what they're using us for. It's our job to deliver that.
So you've done a lot of planning. And over the past 9 years, there's been a lot of changes and everything. But what I want you to do is just take a step back, reach under the table, whatever it is, pull out the crystal ball. And I want you to look, what does the next 9 to 10 years look like in the market? And how does that impact M1? And what is M1 doing to prepare for those changes?
So I will say the buzzword of AI. Going back to the mission and vision of what we're trying to do, it's the digital private bank. The ultra affluent gets a private banker, and it is a very smart, sophisticated person to handle your financial needs. We are pretty close to being able to replicate that for dollars of compute a year. What used to cost 1% of your net worth year in, year out, every single year until you pass away is now going to be replicable with pennies a day in terms of compute. And it's truthfully probably going to get better, where it's not only can analyze every aspect of your finances, we're marching towards everyone having a financial AI assistant, a digital CFO in your pocket that is there to provide education, provide support, answer your questions, optimize your finances. Maybe, again, you beating the analogy to death. We've built the house and it's going to be a smart house. We have all the piping and plumbing to do every aspect of money movement. We have all the verticals across your cash flow and your balance sheet. The next iteration is really, do I have this smart AI assistant helping me optimize every aspect of my financial life? It's only a matter of time before, if we talk 10 years, like, man, AI is moving quickly. That seems like a lifetime, but 10 years, it seems like every single person will have an AI financial guru, their own personal CFO helping them with their money.
I love that you brought up AI every episode we've had. And I'm curious your take on what are the elements of fintech and financial services that is not going to change or is going to be something we could rely on moving forward?
You could maybe separate it into two aspects. One is just the financial instruments themselves. And then the second is maybe beneficial behaviors that people can take with their money. And so the instruments themselves, we're going to have some mechanism of exchange. I think it's going to be cash or the US dollar for a long time. It may be Bitcoin, it may be Ethereum. Like at one point it was seashells, then it was gold, now it's dollar. Like you always need something to transact with. You need to be able to earn money, store money, send money, invest money, borrow money. Like those are fundamentals that will exist for all time. And then you start to get into the sort of principles that lead to good outcomes. It's similar things to health. It's like health is eating right, sleeping well, exercising. I think it's the job of the financial institution to not only sell the financial products, but then to help people on that trajectory to a higher net worth over periods of time. And that's what we really try to do at M1.
That is a lot of great information for people to be able to use and to move themselves forward.
Thank you, Brian. On my perspective, it's a consistent theme as you're talking about building a house, and you can't just like snap your fingers and there the house is built. One of my mentors was Brandon DeWitt, the co-founder and CTO of MX. And I've said this before, but much more explicitly, he would always say, there's no silver bullets, just a truckload of lead ones. And like when building a company, especially a financial services company, that it's tremendously true. And Brian, in everything you've done in the past 9 years and everything you said today, I was reminded of that. And that's daunting for founders that are starting things up, but also encouraging because it's like, hey, I'm making progress on the journey, because sometimes in those early days, it feels you're just running up against the wall. So I appreciate your insights.
There's so much great things that are going on over at M1, and I'm just glad that we had the opportunity to sit down with you and to learn more about what you've done and what you guys are planning to do.
Thanks for having me. It's always a pleasure to chat with both of you.
That does it for another episode of Accrued. If you haven't already and you've made it this far, go ahead and like, subscribe, and share the episode on YouTube and your favorite podcast player. And as always, keep moving forward. As we wrap up today's episode, I've got one last thing for you. If you're in the trenches fighting fraud and financial crime, you know it's a complex battlefield. That's where Hawk's AI tools for real-time payment screening, AML, transaction monitoring, and dynamic customer risk rating come into play. These aren't just buzzwords. They're game changers designed to make your compliance more effective and less of a headache. Imagine slashing through false positives with precision and giving your compliance strategy the edge it needs. Head on over to gethawkai.com to sign up for a demo and discover how their platform can revolutionize how you fight fraud and financial crime.
This has been a production of DD3 Media, with all rights reserved. This is provided for informational purposes only. It is not offered or intended to be used as legal, tax, investment, financial, or other advice. We strive to provide accurate and up-to-date information, but will not be responsible for any missing facts or inaccurate information. You comply and understand that you should use any of this information at your own risk. Cryptocurrencies are highly volatile financial assets, so research and make your own financial decisions.